The tides are changing and the debanking days done. Citibank announcing it is ending its restrictions on providing banking services to retail clients selling firearms. This reverses a 2018 policy that restricted services for businesses that sell guns to people under 21 years of age.
Who also happen to be adults. Citibank saying in a statement, quote, "We will no longer have a specific policy as it relates to firearms." Citibank was among the major banks, multiple major banks, accused of debanking and included Wells Fargo, Bank of America, and JP Morgan.
With us now, Unleash Prosperity Senior Fellow and Heritage Foundation Chief Economist EJ Antoni. EJ, it's a bit of an admission by Citibank that they came out publicly and said that they've reversed this policy. What else have they been up to, and what do you make of it?
Well, Dagan, what have they been up to? Whatever the Biden administration was telling them to do. Essentially, we just had 4 years of regulatory overreach in which the federal government was browbeating all of these financial institutions into trying to conform with their own leftist ideology. In other words, if you don't put in these measures that will restrict carbon, that will restrict firearm sales, restrict, you name it, the donations to conservative organizations, any of those things, the Biden administration essentially was putting these banks into a regulatory box where the only way out was to conform, again, to whatever kind of leftist ideology the Biden administration was pushing. This whole debanking phenomenon is very real. It's very Orwellian, too. And just because it is done through regulatory maneuvers as opposed to something that's put into statute, that doesn't make it any less real to all of the people who couldn't get loans or who lost banking services more broadly.
You know, EJ, trust is a big thing, and I'm a verify, then trust. I don't want to trust and verify with these banks. What have they actually done now, and what should we watch out for to see if they slide it in some way?
Well, you're definitely going to want to keep an eye on all of these institutions because, as you just pointed out, there are ways to slide these different requirements in. So, again, it's just going to take a lot of oversight as time goes on. But I actually have a lot of confidence that these banks, with someone like President Trump in charge, that these banks are, in fact, going to move away from this liberal agenda because it's just not profitable. Look, it's not profitable to deny, for example, a fossil fuel company, money to build a new refinery or to build a pipeline or to build a rail line so that we can transport coal from a mine to a power plant, et cetera. All of these different ventures, the banks only chose not to finance them, or the banks chose to essentially debank these individuals specifically because regulators were forcing them to do so. They would not have done so but for government overreach.
It started Operation Choke Point, Obama-era Department of Justice working with the FDIC, going after payday lenders and, firearms dealers. And under Biden, they also shut down crypto firms, destroyed whole families intentionally. Biden and his financial regulators, it's foul, disgusting what they did to entrepreneurs in this country and tried to hide it. EJ, moving on to this, President Trump ramping up the pressure on old Jay Powell to cut interest rates, which he still refuses to do. Writing on Truth Social, quote, ADP number out, too late. Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. Not one rate cut this year yet, EJ Antoni, but they cut 3 times last year. Political favor for Kamala Harris even before the election. But now you look at longer-term rates, the 2-year and the 10-year, they're lower. Longer-term rates are lower than the overnight lending rate now. And inflation is the lowest in 4 years.
Right, Dagan? I mean, look, even if you want to use the Keynesian models of the Fed, which I think are completely erroneous, but even if you want to just stick with the Fed's own methodology, that is telling the Fed that it is time to cut. You know, Slow Jerome, essentially, he was so quick to cut interest rates, as you pointed out, right before the election, when the inflation numbers were worse than they are today. The inflation outlook was worse, except they did it for political convenience. Now, fast forward to today, the only thing that has really changed is that you have a president who's a Republican instead of a Democrat. But other than that, all of the indicators, again, that the Fed themselves likes to look at, whether it's the labor market, whether it's GDP, whether it's the inflation numbers, you name it, all of their own indicators that they say they pay attention to are more in favor of a cut today than they were last fall. So again, I think it's very difficult to say there's any motivation here other than political. It's certainly not economical.
Yeah, he's certainly not talking to the Atlanta Fed or anyone else out there who's showing the numbers different. The conditions were there. We've talked about this before back in December with that cut. Right now, do you think the Feds will ever, the individual Feds, Atlanta, Denver, whoever, will put more pressure on Powell because he's not going anywhere?
You know, unfortunately, because of the way the Fed is set up today, there's really very little that those individual regional banks can do to put pressure on the board here in D.C. The Fed today is a far cry from what it was when it was first set up in the 1910s. So unfortunately, no matter how much those different regional Fed bank presidents, again, try to pressure Powell, at the end of the day, the power is here in Washington. And that's a very, very unfortunate thing.
And thank you, EJ, for that stat about the borrowing and the Treasury replenishing its account when the debt ceiling goes up. $38 trillion national debt by September. That's all you, my friend, EJ Antoni. Thank you. Good to see you.
Thanks, EJ.
We'll see you soon.
Thank you for having me.